What is going on, everybody? Welcome back to the Phoenix channel. Today is Sunday, October 20th. Beautiful day here in Phoenix, and it's finally cooling off. Want to get outside, and I got a run in, got about 2 miles in, got the push-ups and the sit-ups in, and I hope you guys are doing the same. Had a crazy time in LA. Went to go see some family, and also hit up the crypto summit that was over there, and got a chance to run into Shah. So maybe before we get into things, want to do a quick shout out. Shout out to Shah from EOS Blocksmith, and also ran into Tim Draper, the billionaire over there. And me and Shah hit him up and asked him his thoughts, which I'll probably share in this video. And shout out to the Everything EOS guys, Rezi, Crypto Fees, Imagining Tech, everybody else within the crypto sphere, the Cybercode twins. Shout out to you guys. So wanted to say one of the interesting things for me going to that investment summit, air quotes there for educational purposes. Obviously none of this is investment advice, so you guys should do your own research, otherwise you'll get wrecked. But wanted to say that one of the things that was very apparent to me is just the decline in interest within the crypto space. So you got to imagine this is a major city in the United States. I mean, this is LA, and you know, that typically being one of the more popular areas for cryptocurrencies. Obviously you have Silicon Beach there, you have a lot of startups, you have YouTube, Google, Facebook, you have Snapchat that was founded in Venice. So what was very surprising to me is you probably had at most a few hundred people, and out of the 100 people that were there at the summit, which was targeting mainly investments, most, I would say at least 50% of the people there were either new to the space. I got a sense that they hadn't been in the space for a long time. They were looking to get a sense for the technology and looking for opportunities to make money. So it was a very quite a contrast, guys, from even last year. I would say it's even was less this year, and very different from 2017. So I guess what I'm trying to get at, guys, is this space is still sentiment driven, and you're actually seeing a lot of people, a lot of mainstream people either not showing interest in cryptocurrencies or have very little knowledge of it. So we're still in the very early stages. In talking to Tim Draper, you know, one of the questions and one of the things he brought up was the rules, obviously, or the guidelines that have been passed in the United States, particularly related to taxes. And he was pitching the idea of maybe having some type of a transactional tax on cryptocurrencies, which would be interesting to see. The current space, as you guys know, seems like they're trying to claim that any airdrops at the time you receive them would render some kind of a tax, which sounds maybe from a academic perspective fine, but as you guys know, many market makers can create crazy valuations for people, right? You can create a taxable liability for somebody, boost a coin's value, send it to them, and then give them some kind of a inherited tax liability. So I think the guidelines that have been issued are premature, and Tim Draper seemed to agree. He seemed to be of the opinion that we'd see some type of revised guidance on these things. Obviously no one has broken that officially, but just in talking to him about it, he was kind of more of the opinion of some type of another means for the government to obtain their taxes, which seems more appropriate. So we'll have to kind of keep abreast of that situation. But a really nice guy. We actually happened to be, we actually stopped by to see him. We were on our way back from lunch, and he was nice enough to take a photo with us and also look at somebody's pitch, somebody's product, which was cool, you know, MVP, and he gave him feedback right there on the spot, which was pretty cool. So that was a lot of fun to see. Saw the Sense guys at the event as well, and also seen Dallas Rushing at the event. So he showed off his new interface for Karma. Looked really amazing. So shout out to Dallas Rushing if you're watching this video, and keep up the good work. So on with the rest of the news, I guess, this week. One of the things that was really apparent this week is all the talk about governance on EOS, and the fact that we saw 2 different proposals come out in terms of reforming governance and voting. And we had Dan Larimer's proposal as well as EOS New York. Now, both of the proposals have their strengths and weaknesses. This video is not intended to go over all of them. I'd recommend checking out the Everything EOS video, because they do an excellent job of going into the weeds of the two proposals and benefits and drawbacks to each of them. I think what we'll actually ultimately see, guys, is perhaps a hybridization or a mixing of the two. So you could get certain qualities or I should say, characteristics of Dan Larimer's proposal mixed with the proposal from EOS New York, particularly Dan Larimer's proposal to use different staking pools. I think he had like 5 or 6 different staking pools for different periods. And so the way it works at a high level, guys, it works very similar to the way traditional markets should work, I should say. So you actually have correlated returns based on risk of staking funds, right, in bonds, essentially. I mean, it's not a bond, but it effectively works like a bond. So if you put your money into, say, a 1-year bond versus putting your money into a 10-year bond, the 10-year bond, you putting your money there for 10 years, is going to pay you out more because you're taking on a higher risk, because you're locking up your capital for 10 years. Now, in actuality, if and when this is implemented on the EOS platform, guys, what we're actually going to likely see is secondary markets and liquidity brought in for those bonds or buckets of staking pools. So how can I explain this? If you put your money in the 10-year staking pool, you'll receive a higher return of interest in that amount. Now, people might think that's not movable or transferable for the 10 years, but you could actually tokenize that account that is staked for the 10 years, and then that token, that bond that you invested in, becomes liquid. Now, it may be traded at a discount or premium depending on the demand for that asset, right? So it's a very interesting, we haven't really seen anything like this in the crypto space thus far. It's going to be the first of its kind, and I tend to think it's very promising, very attractive, not just for regular crypto investors and people in the know, but you could see a lot of VCs and institutions, pensions, potentially take an interest in this space. Now, some of that is going to hinge on a couple different things. One is we're going to need to see a willingness by the BPs in power, those active block producers, take an interest to, provide or facilitate this upgrade to the network. A big part of that is not only the proposal itself as it's written by Dan Larimer and the likes of Kevin Rose, but it's also the testing and the coding, right, that would need to be done to actually bring this on the chain. And in watching Kevin Rose's video, which, again, I'd highly recommend you guys take a look at. Kevin Rose actually did a show on this, and I forget which show it was on, but you can watch, just Google or YouTube Kevin Rose Governance, and it would be the latest show. But one of the things that stuck out to me in what he said was that he anticipated this process, what I mean by this process, this governance upgrade to the network, taking something like 10 years, not 10 years, what am I saying? Taking something like 1 year, okay, 6 months to a year. That, guys, is kind of what I was thinking, just realistically, because of the possible testing that would need to be involved, and in consideration that the network is live right now, and so there's billions of dollars on the line, and so any particular issues or errors that would come up, there's a huge liability there if something was not coded quite right. So they need to make sure this is all dialed in correctly, and before moving forward with putting this on the mainnet, needs to be tested and properly vetted, where all the permutations, all potential holes that could be poked in this system. And so the very fear, I think, is that if you introduce something like staking pools, or even this EOS Governance New York proposal, the aspects of it, you could be addressing a lot of the issues that are apparent now, but you could also be introducing a lot of unknowns, a lot of other potential opportunities for errors, additional errors that we're not aware of right now to occur. And so it could be a situation of whack-a-mole. So I think what Kevin was proposing was to have something like 6 months of testing and probably several months of just developing the code itself and putting this on a test net for people to try. Now, realistically, guys, we're in October, November timeframe. So if you're looking at a time scale here, just putting on our project management hats, right? We'd be looking at a May, June, deployment, upgrade deployment for this strategy. Now, that puts us into Q2 of 2020. Do I think Q2 of 2020 is sustainable for the network? I mean, given where we are at right now and the behavior we've seen on the network, we have to understand that this network doesn't stay stagnant, guys, right? So as time is elapsing, the current governance system is changing the shape and influence on the network in terms of who holds the tokens. And so as time goes on, you're going to see more and more of those tokens held by these large block producers in power today. You're going to see more of them holding more control in the network. It's going to become harder to upgrade the system. So one thing that was really interesting to me, and I'm not trying to produce any FUD or anything, but I'd recommend you guys check it out, is Max Dapp's video in which he's interviewing Brock Pierce, who's a notable guy in the crypto space, whether you like him or not like him, okay? It doesn't really matter. My point is that the guy kind of has a track record with Bitcoin and Ethereum. And Brock Pierce came out and said that, in his opinion, he thinks that EOS, as a community, we as a community, have probably till Q1 of next year to get our shit together. And if we're not able to get our shit together, the likelihood of EOS continuing in terms of the price it's at right now is very low. He predicted something like a 10-cent price of EOS. Now, a lot of people could say that's partially Brock playing the game in terms of maybe shorting these markets, and maybe partially that's true. I know he is somewhat bearish on the overall crypto space in consideration of the high risk right now of recession globally in the space. So when you have recessions, there's a lack of liquidity, and you see a drawdown in terms of interest in speculative assets, and EOS could be considered one of those. I think Bitcoin as a whole would have a little bit less damage in terms of that space, just because of the types of characters that are involved in Bitcoin. A lot of people may not like that statement, but you have a lot of maximalists that are adamant about Bitcoin's long-term role, and the fact that a lot of those people are not in a traditional other speculative assets like real estate and high-end debt. So if you do see a recession, I don't actually think you'll see a huge decline in something like Bitcoin. I don't know what the typical profile is for people who hold EOS. There's a lot of libertarian guys. There's a lot of guys like that. A lot of us like-minded guys that probably don't need to sell a lot of crypto assets to sustain ourselves for a few years. But there might be a lot of people who do. And so that could also be a huge pressure on the space as a whole. But I want to know what you guys think. What do you guys think about that whole governance posturing by the likes of Brock Pierce and Kevin Rose? Brock Pierce, again, giving out a Q1 of next year deadline to probably get our shit together. I don't know if that's sustainable or attainable, given what I've just explained to you, and given the news or the input by Kevin Rose, it being more likely like we would need 5 to 6 months to get anything concretely underway. So I think without that, then we're going to need to see much more of a collective undertaking by the community. And I don't know if there's enough motivation to do that. And I'm not saying it's by Kevin Rose or EOS New York. I'm talking about the current active block producers. I don't know if they're incentivized or motivated enough to do anything at this point. And so we are kind of at a crossroads, guys, and I don't know what it's really going to take. There was a lot of hope that this week we'd get some news out of Rio at that blockchain summit for EOS, the community event I told you guys about. I told you guys I wasn't really going because, one, I had to work. the cost of it, and the fact that there wasn't really a concrete agenda on solving the governance problem. And suffice to say, I didn't really see anything concretely come out of that conference. So my own opinion is, if the block producers are really serious about this, especially the OG block producers, some of the indie block producers, I really think that now's the time to call for a more focused collective meeting, not kumbaya. And I'm not dishing the whole EOS Rio thing. I mean, it was a great event. The Rio event was great, but I think there needs to be a very focused, deliberate conference that is called on within the next couple weeks to straighten this stuff out, figure out what the fuck we're gonna do, and start focusing all the energy on that topic, because the rest of the stuff at the end of the day isn't even gonna matter. If you don't have a chain that is respected in the community, that is something that people want to hold, the rest of your efforts in terms of any kind of tools or games or ship games isn't really going to matter. And I know this is kind of like a little bit of a dirty rant, but you know, sometimes it's needed. Sometimes we need a little bit of pain. So I want to know what you guys think. What do you guys think? Do you think that that's the type of priority that the community should have? Because that's my perspective right now. In fact, I would go as far to say that, you know, if we don't start seeing some things pretty soon, I think you're going to start to see a much more rapid action in the price of EOS, because I think there is an acknowledgement of the state things are in. And a lot of the OGs and a lot of the whales that hold tremendous amounts of EOS, and I'm talking maybe 100, 150,000 and up, to your 500,000 to 1 million EOS holders, you're going to start seeing those people just bail out of this whole system. So with that said, guys, let me know what you think in the comments. Hit the like button, comment, subscribe, and until next time, this is Phoenix signing off. Peace.